Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 1st of March. It's been a volatile week in the markets this week, and that's particularly towards the latter part when a bond market tantrum inevitably spilled over into equities. Despite the soothing noises from the Federal Reserve Chairman, Mr. Powell, we had a situation where investors were starting to reprice some of their inflation expectations. Now, with the amount of loose monetary policy going on and an expected boost to the economy when pent-up demand is released, it could be that inflation begins to spiral. In normal circumstances, that would result in a rise in interest rates, and that's what the market has been starting to factor in. That's despite, as I say, the Fed saying that they're going to keep rates on hold for some considerable time. That in turn, of course, would mean higher corporate lending and, importantly, higher US mortgage rates as well. And also higher interest rates tend to be less positive for equity markets on the basis that they crimp growth. So it's actually those earnings stocks and earnings growth potential stocks which have taken the brunt of the hit. In the UK, on the other hand, the planned roadmap exit from the pandemic has been rather more positively received, and the FTSE 100 has been holding up fairly well. That's on the basis, of course, that we've seen something of a spike in the likes of airline shares as well as travel generally, and indeed tourism and hospitality. So in terms of the year to date, the Dow Jones is now up 2.6%, the S&P 500 is up 1.9%. The Nasdaq's up 1.8%. That compares with nearly 8% a week ago. So that's where the pain has been taken. Meanwhile, the FTSE 100 is a little further ahead and up 2.8% in the year to date. Turning to next week, a couple of companies reporting full year numbers all on the across the board. The first one being Flutter Entertainments. This is the company which was previously known as Paddy Power Betfair. Shares have been on a real roll, up about 58% over the last year. They're starting increasingly to put a toe into the lucrative US market. So hopefully there'll be some kind of update from their expansion there, and indeed their joint ventures. Look out for the brand names in the States of FanDuel and also Turner, because with Turner they've got a 5.5-year partnership which should put the brand in front of 90 million households. Also looking forward to full year numbers from the house builder Persimmon. Shares are down around 14% over the last year, despite all the tailwinds for the sector. They've obviously been through a year where the first half the damage was done. The question with the full year numbers is whether the second half could have repaired some of that damage. In the meantime, return to dividend payments sees the stock yielding somewhere around 4%. Also look out for any updates on the forward order book. Finally, the insurer Aviva. Shares down just 3% or so in the last year, and underpinned by a return to dividend payment again. They're yielding around 6%. Thing to look out for here, I think, is mainly in terms of their strategy. Increasingly, they're trying to concentrate on the UK, Ireland and Canada, which could be at the expense of the likes of Asia and continental Europe. So any update there will be most welcome. Thank you for watching. Have a great week.